Welcome, guys. Another video here. We're on fire. Thank you for the subscriptions. Thank you for the new members. I appreciate all the comments and likes. Let's get to a bit of a historical context here. Let's look at rates. A lot of people are confused, saying, "Okay, you think the bonds are going up? Like, what's the deal there? Why we're in this precarious situation? Gold is going up, silver is going up, precious metals, etc. Trade wars, currency devaluation, blah blah blah." What's going on? Okay, so first let's take a look at the historical timeline over here. What happened during the period of interest rates when central banking really came to the scene? Okay, early 20th century up until the late 40s, we went through this deflationary period, and we can see it in the rates as the rates were quite high for that time and they were decreasing in value over time. Is because of the industrial revolution. Whenever we have an industrial revolution, we see that things return back to the marginal cost in terms of pricing. Why? Well, okay, you did have the gold standard, which was a fixed economy back then. We had significant productivity gains, and we had severe monetary contraction. Now, the Great Depression brought in accentuated the deflation after the stock market in the wars that took place in the 40s started ramping up a little bit of that industrial advancement, and that's why we see from the 50s onwards we see this stagflationary period, which towards the end, I also have to mention that each candle represents 3 months, but until the 70s, late 70s, we see the embargo between US, Iran, the Arab countries. Oil shot up, and back then oil was the determining commodity when it comes to inflation because of the supply and transportation, raw goods, etc. went up because of supply disruption. Now, in the 80s, early 80s down to the 2020s, essentially, we see this period of deflation. And what do I mean with deflation? Well, rates over here were coming down. This is a 10-year yield. Rates were coming down precipitously. Sure, there were some bounces, but what happens when you have technological advancements that are really revolutionary, especially with the internet, the introduction of a lot of different cell phone towers. You had GPS expansion. You had a lot of things that really propelled productivity, especially when it comes to supply. We see that the prices slowly drop, okay? Because technology always brings in more features and more services, and the pricing of that is sure can be expensive in the beginning, but after that it becomes much cheaper and cheaper. Like, let's look at cell phones, what cell phones offered compared to the price in terms of what you can get now for the price of a cell phone, and what it offers you is just from A to Z. It's you cannot compare. It's incomparable. So this is what I think we're entering into. So these are business cycles, right? That's why I think candles in quarters makes more sense. So here I had the bottom of rates back in the 50s, late 40s. The rates increased up to the 80s and then have been on a precipitous drop, but a grind lower until April 2020, which rates were close to 0.4%. Now we saw a strong bounce after the Fed increased, and rates have been somewhat consolidating. But what I believe is going to happen is a check back over here, if not lower. We're going to see a severe drop coming down into interest rates. Now, we need a lot of jazz for that to happen. We require a recession, which is in the books right now, given what's going on with the labor participation, the consumer sentiment as well. The consumption has dropped. We will see that check back, and it will happen quite fast because the Fed is always behind the curve. The Fed is always behind, and when they will panic, they will drop rates significantly. and at some point we're going to enter a new stagflationary or inflationary period where rates then are going to skyrocket. And I do think that we might see interest rates in double digits, just like over here in the 70s and 80s. So that is why gold is right now rallying, and silver and all these precious metals, because they're sniffing out this period of stagflation. One thing I want to show you, the indicator here that is very, very important. Notice over here when interest rates were declining, look at the RSI, it was under 50. Okay, for the most part, you had some spikes, but those are exceptions. Most of the period of time, it was under 50. When we entered that stagflationary period after the 50s, the RSI jumped up. So this is a crossover where we jumped up in the 50s and we even reached here in the mid 80s. Now, after that, after the 70s, entering into this period, this golden period of productivity, especially during the Reagan administration in the US, we see that the RSI dropped below 50. Spend a lot of time here. Now, what I'm contesting is that this is the crossover. This is the crossover because if you look at a large time frame, okay, this is playing out and is indicating where we're going next. So we had this massive crossover here with the rates increasing, and we're well over 50 now. We're spending time here. This means that we're entering into a new inflationary period, which could last a few decades. And this could be a stagflationary period where we see a decline of productivity in some areas, but a boost in other areas, a deflation in some prices with some assets, but an overinflated price in certain other areas. And this is certainly going side by side with the whole narrative of US, China, Russia, wars all over the world. We have wars in the Caucasus, and we have wars in the Middle East, in the South right now, in the global South, in South America, we're seeing contention between Venezuela, US. We note that China and Russia has military camps over there. So this is very significant, especially when we look at business cycles every few decades. So that's why I believe that this is an important inflection where we will have to see interest rates check back to the lowest prices before we rally up. That's all I have for you guys. I hope you liked the video. Please like and subscribe and let me know your thoughts.